Today, we are talking about a mistake that can delay or even derail a settlement entirely.
Oh man, it happens a lot more than you think. Let's dive into it.
Hey everybody.
Sean and Kelly here, Price and Price Group of Samson Properties, and I am really excited about this. Let's dive into this.
Yeah, this is especially important if you are a home buyer, and extremely important if you're a home buyer and you already have a ratified contract.
Yes, and we're gonna get it. Oh man, we've seen too many deals break up because of this. So
Yeah. So
okay,
will you be the myth presenter?
I will be the myth presenter, and you will be
And
the
I'll
myth
be the myth buster.
That's right.
We are
Okay.
not infringing upon their
I was thinking the same
copyright
thing.
or trademark. We are
proper credit due to whatever channel that's
Yeah.
on. Okay, myth number one is that this is a blanket protection and it covers everything in the house.
absolutely not. It's not a home warranty, which covers a lot of your appliances and things like that. A home warranty is oftentimes something that you'll buy at settlement. It is not title insurance, which covers the actual deed, the ownership aspects of the property, and we have videos on that. What else is it not?
It is not. It is not flood insurance.
No, it is not flood. It doesn't cover earthquake. It doesn't cover, a big one is like sewer backup. That's huge.
Okay.
It's going to cover the replacement cost of your home. And we'll get into that in a minute because we have myth number two.
Myth number two is that it covers the full value of your home. So if I have a
No.
$1.6 million home, it's going to give you $1.6 million if something happens.
No, so that is something that people think, right? You bought a $1.6 million home, so that means the insurance you buy has to be worth $1.6 million,
Yeah.
$106 million.
$106 million,
coverage.
yes.
No, it doesn't include the land. So the sales price is not your insurance price. Okay, you want to cover the RCVs, the replacement cost value. It's the cost to rebuild the structure, and you'll see different coverages like coverage A, coverage B, things like that. And it is not the sales price.
Okay. And to that point, is it possible if somebody, like let's say we bought our house, and we bought our house, it was 1.2 million.
Yeah.
The house is now worth close to 1.8 million.
Yeah.
Has our homeowners insurance automatically escalated with the value and the rebuild costs, or is that something you should check annually to make sure you have enough coverage to cover a possible
You
rebuild?
need to check it. So you're lucky, honey, because when I did it at first,
Yeah.
number one, I got an allowance to go above because
Okay.
of the type, and that's another thing is you really want someone who knows how your house was built, right? What
Yeah.
kind of finishes and things like that. And then there's a surplus to that replacement cost that
Okay.
you can get on your policy, so you definitely want to have it looked over. Certainly annually, even at the outset, to make sure that you're meeting the current replacement costs.
Yeah.
It doesn't, not all carriers automatically do that for you, so
Okay.
it needs to be looked over.
Okay, so you want to make sure that you have the right kind of coverage for your dwelling and the
Yes.
current value and the current expenses.
Yeah, and
Okay.
especially in our area, I mean, 1 million, I mean, that sounds amazing. And where we lived in Florida, that was like, we were some highfalutin, you
Yeah.
know, fancy pantses, but around here, it's a 1979 build.
Yeah.
You know, it's
Yeah.
just the cost of living up here.
And they don't build them like they used to.
They don't build like they used to. Get things built in 1979, we're really
That's-
strong, we got good bones.
That's her birth year. All right, myth number three is, and this is a really, really important one, is getting the insurance is easy, and there's no rush. You can just wait until the end of the escrow to get it.
Yeah, so we do feel like buyers, we've heard this like, oh no, I'm gonna do that later, I'll do it later, because
Kick it
they
down
think
the
it's
can.
just another thing that you check off the box. I'm
Yeah.
gonna call somebody or click a few buttons and then there it is, and that's just not how it is. It's not only dependent on you, the insured person, right? I mean, there is a soft pull on credit. It's not anything that's gonna affect your credit, but they need to see your credit worthiness. But it's very largely, it's mostly property dependent. So your insurance agent is going to do research on that new property that you haven't owned to see how many claims have been filed.
Oh, that's a good point. I got a story about that.
Okay, good. So it's not, it's like sometimes can it be that, the sellers, like the past owners were just, what is it?
Claim happy.
Exactly.
Yeah.
Or is something about the roof or the structure or the whatever, is there a problem there? If they made sure they always had sewer backup and then there were a lot of water backup claims, they're gonna hesitate or charge more to
For that.
insure that house, so you have to start this sooner. Sometimes they'll decline homes outright. When we bought our house, the sellers at the time had their policy with, I wanna say Liberty Mutual, Liberty.
That's right, and they, because of
Or
our.
it was one, yeah, it was
It was
one
our-
of
but our
them, and
roof,
then
right?
when we bought it, nothing changed, we thought, okay, we're just gonna, I'll go with them, because they wrote the policy. No, they had made changes, they did not allow cedar shake roofs
Yeah, I
anymore, so
remember
we
that.
had to switch policies, and again, don't automatically assume that about Liberty, I could be mistaken, it could be someone else. But then, so then you start shopping around, okay, now that we have a metal roof, everyone took metal roofs, and that's one of the reasons we went metal instead of
Yeah.
the beautiful cottage look of cedar shake. But so that's important to
Okay,
know.
so two quick stories.
Yes.
First thing is not a story, but first thing is, you also can't wait until the end, because your contract actually will stipulate a deadline of when you have to begin that application process. And
Yeah.
if you ever get into a dispute over the contract, and the seller decides they wanna go and look for when did you start this process, if you didn't meet that deadline, that could be a no for the seller. So you always wanna meet your contract deadlines, yeah.
And there's so many implications behind the scenes, right?
Yeah.
That the seller could have a backup offer.
Mhm.
It's better than yours, and they're
And they're
waiting for any
looking
and
for
every
it.
reason for you to mess up so they can cancel that
Yeah,
and take the backup offer that's better. So really, I wanna say this is why it's so good to
It
have
needs to
someone
be-
who knows all of it,
Yeah.
right? Your agent, your insurance, like,
Yeah.
it's
so
really
what
key.
we do with our buyers is Kelly will actually start pulling that as soon as you ratify it, because she can represent
Yeah.
clients with that, and she will actually help them get that insurance and make sure it's working appropriately.
Which ties into myth number 4.
But I gotta tell my story first.
Okay,
So
sorry.
the story, we had a buyer under contract. We were a few days out from settlement. They had started the insurance process, but they were having a hard time getting it because there had been multiple claims against this house. What ended up happening, because we were talking to the seller, they didn't make the claims. What ended up happening
Right.
is they had ended up having two renters that had been in the house for like 2 or 3 years, and those renters did not maintain the drain in it was a walk-up basement. They did not maintain the drain at the top, so the water ran down and got into the basement and affected their personal belongings, and that happened twice. So there were 2 water claims.
On their
On-
renter's insurance, right? So they made claims
So it
on
was
their renter's
attached,
insurance
exactly.
about their belongings, but it attached to the property.
To the property,
That's
so when you
right.
said property specific, so when they do this background check, you don't know what's gonna come up, so you
Yeah.
also wanna make sure you have time to address these issues.
And the
we
sellers
did get it
/
resolved.
landlords, they didn't even know
They
that.
didn't know about it, cause there was no damage to the property, it was
Right.
only their personal belongings, cause the floor got wet.
Right,
And apparently they kept a lot of clothes on the floor,
yeah.
so they made claims about loss of personal belongings.
And so if you are getting a new property and, like, you're the buyer getting a new property and you are shopping for insurance, oftentimes they just will deny you, no.
Yeah.
So it's really good to have an advocate, your agent, be able to make these contacts like
Yeah.
you did and find out, get to the bottom of it, because they can grant exceptions. They can
Yeah.
make notes in the file on the property to kind of clear that
Yeah, exactly.
error code in a way.
Yep.
Okay,
Yep.
that,
Um,
yeah, I forgot.
Yeah,
That's a good
that
story.
just kinda came to mind.
Good, good.
Okay, myth number 4, if the lender approves me, I'm good. In other words, if the lender pre-approves your loan, then you're good to go, you don't have to worry
Okay.
about it.
Lender hat, I'm gonna tell you, okay, we've pulled your credit, that checks out, your income, your employment, all of that checks out, you're good to go. We've also, along with title, we've looked at the property, cleared the property, everything with your property is good to go. So I'm gonna issue you your commitment letter, and this is
It's a
one of
conditional
the-
approval, right?
Yes, that's right, the conditional approval. And that's what you need to provide to your agent so that we can give it to the seller. And then they say, okay, great, you've qualified for your loan.
And
It's
your-
really
and-
weird.
And your finance contingency is now satisfied, so it is gone.
But it's not true. On that conditional letter, they are going to have the conditions, like maybe the appraisal hadn't come in, but if they approve the property, then the appraisal's fine. You're gonna have a condition that you have your homeowner's policy.
Yep.
They will not give you the loan, they will not give you the money on a house unless that house is insured.
Yep.
And then there are back dates of 3 days to get your loan disclosures
Yep.
and blah, 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 blah. they have to have that by a certain time. And if you don't have this, or you decide, oh, okay, now I'm gonna do it and try to fill that condition, but then you find out something about your roof, something about these past claims, and you're having to scramble to find this policy, that's going to be an issue.
And you could possibly even default and lose your earnest money deposit, even though your loan was technically approved and the lender did what they were supposed to do, because you didn't do this in a timely manner.
Yes.
And you, as the buyer, have to do this. It can't be done by your agent, it can't be done by
Yes.
the lender.
No policy, no closing.
Yep, that's right, pretty much.
That's just how it is.
So that's where the problem is. That's where the problem is. We can run into timing issues. We can run into finance contingency issues. We can run into all kinds of issues, and that's something to keep in mind too in a
Because
situation.
you lose your deposit,
Yeah,
right?
you lose that deposit. And if you're in a situation, and a lot of agents don't know this right now, but if you're in a situation where you're about to put an offer in on a property and you're having to compete, so you're waiving your finance contingency because you know you're good to go, but the roof is 30 years old, that homeowner's insurance, they're not gonna approve it because they're pushing back hard on roofs right now.
This is something
So-
that I was surprised, and I knew, like, from our perspective, Realtor wise, it's like, say, for some reason, our clients are starting to have issues getting their homeowners policies.
Yeah.
Which is in large part why January, he told me I was gonna get my
Get your
insurance
license,
license.
that's right.
Well, in seeking appointments through all these carriers, because we are not captive, we're an independent agency now,
Yeah.
so we've shot multiple carriers. And I was so surprised at the number I saw. The sweet spot was the roof age between 5 and 8 years.
Yeah, yeah.
I'm like,
It's
5
over-
and 8, I mean, it used to be 10 years, 15.
Yeah, half-life left or whatever.
I was
Yeah.
so surprised. So any of you out there who are considering replacing your roof, please reach out and we will tell you. I can show you which roofs will get you the longest
span.
the longest life on them.
That's right.
So that was very surprising.
Yeah.
5 to 8 years
yeah.
on, like, many
Well,
of them
we were
across
hearing
the
in the
board.
mastermind, they were talking about people with 10-year-old roofs having to replace them to get the transaction done. It's crazy.
Yeah.
So as a seller,
Not
you,
10, but 5 to 8.
yeah, so what does this mean to you as a seller? You just be prepared. I mean, because if your buyer has to have insurance and they can't get it, you might have to replace the roof to get a transaction, to get a buyer that can qualify.
If
So,
we represent a buyer, which is mostly who we're talking to right now,
yeah,
if that roof is older than 10 years, we're going to have a
contingency.
contingency on you being able to get your insurance policy, even though it's somewhat sort of built into the loan.
So that's an important thing,
Contingency?
and that's where I was gonna go before I was so rudely interrupted about 20 minutes
With
ago.
early
But if you're putting in an offer and you're trying to be competitive and you're waiving all your contingencies, if that roof is older, you need to have that contingency for homeowner's insurance. That's just a protection you've gotta have, cause it could cost you
Yeah.
that earnest money, so.
That's a fact, Jack.
Okay, and a lot of agents don't know that. They don't know that the roofs are an issue because they're not doing enough transactions to see these things happening, so.
Or even
it's,
if they've heard of it, they don't really know what to do about it.
Exactly. Okay, so what do we do to keep this from happening?
What's the
strategy?
strategery?
The strategery, yes.
Start early, please.
Yep.
Start early. As soon as we say, hey, congratulations, the seller has ratified your offer, you are under contract, I'm quickly going to be sending you a link to a form to fill out so that I can start contacting all of these different carriers to try to find you the best quote for your homeowner's policy.
That's right.
And I will do that for anybody. You don't have to be.
You have to be our client, yeah. Yeah, so that's it. Start early, get that quote fast.
Yes.
Know the risks. Make sure your agent knows the risks of what you're looking for potential issues with the insurance down the road.
Yes, and your agent matters.
Yeah,
And
absolutely.
if you're working with someone that you absolutely love and they're not bringing up homeowners insurance quickly, have them reach out to Whistler's Insurance.
Yeah.
WHISTLERS Insurance. That would be no way affiliated with like
Price and Price Group or
Price and Price or
Samson
anything,
Properties,
but
yeah.
I can help your agent out. I can speak their language and help get this policy for you.
Absolutely. So the bottom line is no insurance, no loan. And Kelly, from the lending side, can say that they can do everything perfectly. It's not your lender's fault. It's something you have to do, and you have to do it quickly.
Yes.
So, okay, if you have any questions about this, or if you would like to talk about your personal situation, you can always reach out to us. Give us a call at
703-783-2143.
That's right.
And if you want us to, you don't get to,
I
sorry.
don't get to, yep.
Go get your license. If you want me to look over your policy
Get your license.
and your coverages, just to make sure that everything is in line with your goals, then please contact me. A different phone number, 703-581-7036.
Yeah, all right, very good. That's right, that's good. I'm looking forward to that. Bye, guys.
Hey, everybody.
Sean and Kelly here, Price and Price Group of Sampson Properties, and what are we about to talk about?
The Market Snapshot.
Yay! What's happened in the Northern Virginia real estate market in the last 7 days in under, hopefully,
Let's
5
go
minutes.
under 3 minutes today.
Under
We've
3.
got this.
Okay.
This is everything that has happened in the Northern Virginia market in the last 7 days. That's right, ladies and gentlemen.
And what
it
the
is
contracts,
updated,
and what the contracts
are
are like.
looking like.
All right, here we go, let's go. All right, okay, so we're about to dive into the stats. We are going to get straight to it because we are.
Because he gotta go.
I
He
gotta
got
go.
an appointment.
That's right. All right, ready, go.
Okay, that black squiggly line you see right there, that is the buyer's activity. That's how many homes have gone under contract in the last 7 days. The teal line, that is the seller's activity. That's how many homes have newly listed on the market in the last, been newly listed on the market in the last 7 days.
That's right. In other words, the black line is the demand and the teal line is the supply. And you can see that we had a spike in both last 2 weeks ago, and that was coming back off of Easter break and coming off of spring break for Fairfax County. Last week it evened out a little bit, so we had a slight increase, like maybe a 2% increase in buyer activity, and we had a decrease in inventory. So that gap between the two actually opened up more, which means that if you go down here to the seller's market versus buyer's market, this graph means.
Okay, so the center line, that's your normal market, completely even, okay? Anything above that center line is a seller's market. That means there are fewer homes on the market and more buyers, so there's more competition out there. Below that center line, that's a buyer's market. That means there's way more inventory than we're used to, than we've seen in a
Yep.
very, very long time, and a lot more
Flexibility and
more
buyer.
homes, fewer buyers.
Yes, yes, yeah, that's right. Okay, so what happened in the last 7 days? Because this gap increased, we actually moved up into a little bit of a stronger seller's market.
Mm.
So what we're actually seeing in the market does match this, but let's look at what the contracts look like. This is the largest number that we've had as a sampling from Cardinal Title Group. We had 277 contracts, which is beautiful.
Mhm.
It's a lot of activity. So we're gonna focus here on Maryland. Hey, they added in, or Virginia, they added Pennsylvania.
They did
That's
add
the first time. I was
100%. What? Higher than list? What the
What
cuss
the
is
heck?
going on?
They must
I
have,
think-
they must
look,
have one sample.
But look, everything is, maybe it's just a filler right now. I don't think that's real
Maybe,
numbers.
could
yet.
be, yeah.
Ignore Pennsylvania for
Yeah.
the time being.
So in Virginia,
Looks like
we
got
had,
a storm.
oh, it does, it's beautiful.
Beautiful. I love
Squirrel.
it.
Contract price, we had 38% go above contract asking price and 35% went at asking price, so that's 73% that went at or above asking price. And we had 75% that went in 22 days or under. So again, that 22-day mark is a sweet spot. Sellers, if you're pricing it too high and you get beyond that 22 days, you're gonna start getting lowball offers.
Yeah.
Buyers, just because a property's been on the market and has made it through the first weekend does not mean the sellers are gonna be ready to give you a discount. So have your agent run the comps, see what the actual value of the property is, see if it is overpriced, and come up with your strategy appropriately. But if it's priced right, don't try to undercut in that first 3 weeks, because it's
Right.
not gonna work.
It's true.
And you're gonna be missing the property. As they
What's the
say,
difference in the buyers that are willing to shop and like really want it and they pay for it and they go to Michael Stars and they put all this money out, right? And then it's past season and everything else, and the people who don't go to Michael Stars, instead they go to what our daughters call the mom store, like TJ Maxx and Marshalls, because I go there a lot.
yeah, I don't even know what
You're gonna
Michael
see
Stars
Michael
is.
Stars there, but like for a quarter of the price.
Yeah.
That's
That's
that
the- that's the
35%.
black, yeah.
And then, yeah,
Yeah.
that's
Good
what
example, what's Michael Stars?
Oh, it's just a brand.
Okay, yeah, good example.
I love you. I love that
me too.
about you. I can wear anything.
Financing versus cash. A lot of cash buyers think even in a competitive market that if they pay cash, they have an advantage, they can come in lower. The fact of the matter is that finance money is just as good and spends just as well as cash money. It does give you an opportunity to waive some concessions, but a lot of cash buyers still want their appraisal, which gets away from any value for it.
Yeah.
So cash buyers, you just need to be aware that if it's still in a competitive phase, you've got to pay retail or above.
Yeah.
Next, we'll talk about the contingencies. Virginia, still sitting about 3/4 with getting the finance contingency and the appraisal contingency, so that's
Good.
beautiful, and buyers can still protect themselves.
I like
Yeah,
that a
me
lot.
too. As far as inspection contingency, still about 65%, 64, got their inspection contingency, and these other 34, is that right,
I would
36?
say it was pre-offer,
Okay,
I
we're
still
doing-
say it's pre-offer.
Yeah, so I would say that buyers, even though it's competitive, buyers are actually protected in this market
Mhm.
versus markets of the past when we were in this high activity markets. Sellers, this is an important number for you. 99% of these 277 contracts had the seller offering compensation toward the buyer's agent. If you are a seller and you're dead set against offering and contributing to that compensation, you're gonna turn buyers away because that's an extra expense that they're having to come up with.
Yeah.
So,
They'll offer that much less on your property
Yeah.
because the money has to come from somewhere.
and that's even if they can't offer it, because let's say that they have to pay an extra $30,000 to their agent. We're using a $1 million property for example. Let's say they have to pay an extra $30,000 to their agent. Well, they can't offer you $970,000 because they still have to pay that $30,000 out of cash. That's
Right.
money out of pocket because
Yeah.
they're not able to put it in a
They
loan.
go to your
They gotta go to
neighbor
the
for
neighbor.
$1 million and they're willing to pay at least some of the buyer
Yeah.
broker commission.
Yeah.
And then your neighbor is hosting you at their congratulations, we have sold our house party. What are you gonna take?
How does that feel? Anyway, so, all right, so sellers.
Be like,
you
I'm
just
sick
have-
that day.
You have to be ready that. All right, guys, if y'all have any questions or if you would like to talk about your situation, if you're considering entering the market as a buyer or a seller, strategy is really, really important right now. So reach out to us, 703. She's got two numbers to her.
783-2143.
All right, guys, we'll see y'all next week.
Bye.